every company, look, every family on earth should adopt the Bitcoin standard, right? What is that, 1 billion families?
Yeah.
Every person on earth should adopt the Bitcoin standard. That's 8 billion people. Every company on earth should adopt the Bitcoin standard. That's 400 million companies. Now your next question is, well, is there anything I can do that's better than that? Well, there are a lot of other twists to it. If you take a private company, take it public, right? You add value. Now, all of these companies are competing to do something. The issue is, what's the something? And it depends on the company. So I think we're very early. I mean, not even 0.1% of companies are doing this, right? So, I mean, if you're less than 1% adoption, you're still pretty early. There's a lot of different business models you can pursue. If you're a private company and you're raising $10 million in order to fund operating losses, you could just raise 50 million and buy 40 million of Bitcoin and fund 10 million in operating losses. And I would definitely recommend that. That's better, right? Mm-hmm. Right. So every private company can do that. Now the question is, can you raise the money? Okay, well, it depends on who you are and whether or not we like your company and whether you're trustworthy. So this all becomes an exercise in capital raising. And the question is, will some companies be better at raising capital than others? Sure, they will. Mm-hmm. Are there some markets, if you're launching a company, a Bitcoin treasury company in Japan, your odds are higher than if you're launching that same company in Venezuela, right? I mean, where's the money, right? So I think that the successes will be companies. Well, first of all, every company will be successful, right? What's the alternative? You're holding Egyptian pounds in your treasury. So every single Egyptian company that adopts the Bitcoin standard will be more successful than if it did it, right? It's just that there are certain options right now for people that are creative to go beyond just success. If you're the first company in Japan to adopt the Bitcoin standard and you grow rapidly and you generate a lot of capital, then not only do you have the most compelling BTC-backed equity in the Japanese capital market, you can have the most compelling BTC credit instruments. What is trillions of dollars in Japan, right? So how many companies in Japan can do that? Well, not every company can be the Amazon of capital markets in Japan, but at least one can be. Now, what about the rest? The subtext is always, well, is it too late for the rest of us? No, you're still better off than if you didn't. Yeah. Right. For example, how many companies have issued mortgage-backed securities? How many companies have issued mortgages? Or how many companies have ever issued junk bonds? If you're the first company to issue the junk bond, then I guess that's good. But what about the second or the third? It worked for them too. So I think as a practical matter, everybody benefits. The early adopters benefit more. Those that are run by a charismatic leader and a good management team can grow faster. The more creative you are, the better. And if you're not disciplined in the way you run the capital structure, then you won't do as well.
We've seen ill-placed criticism thrown at Bitcoin because of people doing irresponsible things with it and their companies blowing up. So I'm talking about, exchange blowups and paper Bitcoin and all this kind of stuff. And Bitcoin is very efficient at pointing out the irresponsible behavior and punishing it. So I guess my question as it pertains to companies that go with a Bitcoin treasury strategy, if companies come into that space that, were underwater already, that, weren't running an efficient business, and then, more or less ape into Bitcoin with debt that they perhaps couldn't afford and the market hits a downturn, does it also in a way kind of clear out the riffraff in an expedient manner there? Or does it rescue those people that weren't being particularly prudent with their funds?
Well, there are good companies and bad companies, right? So if I give you a company making 100 million a year and they adopt Bitcoin and they start buying 100 million worth of Bitcoin, they'll be 10x better. If they borrow $1 billion, they'll be 100x better. If they manage to launch in a two market, they'll be 1,000x better. If they screw it up, they won't. If I give you a company that's losing 100 million a year and they announce that they're adopting a Bitcoin standard, no one's going to give them any money. Maybe they don't have any Bitcoin. So the point is, putting out a press release doesn't solve your problem.
Yeah.
So in that particular case, if the company's got $1 billion of debt, losing 100 million a year, putting out a press release announcing that you adopted the Bitcoin treasury model doesn't help you, right?
Yeah, absolutely.
Right. If I take a bad company, if I take a bad P&L and I attach a good balance sheet, eventually I burn all the money on the balance sheet. Like, would you invest $500 million of Bitcoin into a company losing 100 million a year that intended to keep losing it? Probably not, right? So the thing about this market is the Bitcoin treasury company movement is traditional companies trading in the public markets that have adopted the Bitcoin standard. It's not crypto companies. So it's impossible for them to actually generate or take on the leverage the crypto companies took over. The crypto companies were levered 20 to 1, 30 to 1, 50 to 1. It was very common in the crypto in the height of the crypto era, people would give you $1 billion loan for 800 million of yo-yo token as collateral. Okay. You can't get a loan to buy Bitcoin in the traditional finance market. So for example, I can't sell a bond and so all these Bitcoin treasury companies, they're not getting levered up. They're raising equity. They're not raising debt. The debt markets won't give them capital. So whereas if you look at what created the crypto winter, I was levered up 20 to 1 on FTT token, and then I pledged $1 billion of FTT for some Tether, and then I went and I bought some whatever Luna or something, and you ended up daisy chaining 10x leverage 3 times. You created 1,000x leverage on yo-yo token, and yo-yo token collapses, and the entire thing collapses. You can't do that in traditional finance markets. Like if you can't borrow $1 billion to buy Bitcoin. No one will give you the money. If you had $1 billion of Bitcoin, you can't borrow $1 billion against it. Mm-hmm. You can't even lever it 2 to 1. Like my company's levered 1.1, like 1.2. So you might get 10, 20% leverage, maybe 30% leverage. You can't get 10x leverage. And so all of these companies that are being launched are governed by much more conservative financial principles. The thing that bothers us is, let's take the capital markets or the credit markets. You can't get a credit rating. We have stuff that's 10x. We have bonds that are 50x over collateralized, 50 times. We can't get a credit rating on them. Okay, so why would you sit around worrying that these guys are getting over-levered? That's not the problem at all. All the Bitcoin treasury companies can't get over-levered if they wanted to, because the conventional credit markets are so hyper-conservative. They actually value Bitcoin up until right now is worth 0. You can't lever it at all. So who's funding all this? It's equity. And who's behind the convertible bonds? That's equity. For example, when someone buys a $200 million convertible bond from you, they sell $150 million of your equity in order to hedge it. So what you've really got is probably not even 5% leverage in the entire system. If you had $100 billion of Bitcoin, you might have $5 billion of something that looks like leverage. That's about all you have. Oh. And so there's really not that much there, because there's no way to get it, right? The only way to sell a convertible bond is have so much liquidity in your equity that the convertible arbitrageurs can short the stock, you see. So if you don't have liquidity and if you don't have cash flow, then how do you get a Bitcoin treasury company working? And the answer is you have to actually go and find equity investors. You have to find someone that will inject a slug of 100 million, 50 million, 200 million, 500 million of equity. And they might do it in the form of US dollars, or they might do it in the form of euros, or they might give you Bitcoin. But at the end of the day, they're equity investors. And so this entire movement is really the creation of BTC-backed equity. And the reason it works is because if you look at a chart, and we put a chart like this in our Stride presentation about a week ago. Out of about $100 trillion that's under control of institutional money managers, where they can reallocate it any given day, 35 trillion is equity, 65 trillion is earmarked for credit. There's only 3 trillion that's invested in something that akin to a commodity. 2.3 trillion of it is gold held by central banks. They're not going to sell their gold to buy Bitcoin or to buy your equity anytime soon. So you've got about $700 billion of money in the institutional market that could be invested in commodities like Bitcoin. So there's 100x more money available for credit or equity, and it's like 700 billion versus 35 trillion available for equity. So at the end of the day, the money is sitting in these funds that have mandates to invest in equity. And they can buy blockchain group, or they can invest in Smarter Web, or they can invest in MetaPlanet, or they can invest in Strategy. They just can't invest in Bitcoin. They can't, they won't, they just can't. So it's just that simple. So these companies are essential in order to bridge the traditional finance economy with the crypto economy. And if you don't have the companies in the middle, there's no way for the capital to flow. But with the company, like Smarter Web or like MetaPlanet, then the capital that is locked up in a retirement account in Tokyo or London can flow into a Bitcoin treasury company that can then take it and buy Bitcoin with it. And we could go into lots of details about why is it like that, and is it fair, and is it rational? It's above our pay grade. The world is structured the way it's structured, and that's where the capital is. And the way you got to look at it is in a couple of seconds, the money can move from there into the equity, or we can wait 30 years and see if the world changes, and then maybe it will and maybe it won't. But it's like 30 seconds or 30 years. Like that's your issue. So the Bitcoin treasury companies are meeting a need, right? They're bridging the gap, and they're solving this problem for the investor, and that's worth something. And so that's why they merit a premium. And then because they generate that premium, because they're more tax efficient, they're more capital efficient, or again, simple example, I give you a suburb, and on the left side of the street are houses that you can buy and put a mortgage on with no money down, and it's cheap mortgage. And the right side of the street, you have to pay for the house in cash. Okay? And you've got the identical houses on both sides of the street, but what do you think the house on the left side of the street that you can get no money down will trade at a premium to the house on the right side of the street that you got to pay for with cash? Right? I mean, the answer is obvious, right? The house on the left side of the street will be double or triple or quadruple, because the world's full of people that want a house, and the world's full of people that don't have the money to pay for the house. So the Bitcoin treasury companies are giving you the ability to get Bitcoin exposure with someone else's capital, or with capital that's stranded. And that's why they're growing rapidly. And that's why we need more of them.